Thanks, Jeff. I'm going to speak a bit about what we saw for fund flow activity during Q1. First slide we have is just the fund flow activity by asset class for the first quarter. Equities had positive net flows of $36.4 billion. This was split between $23.3 billion going into mutual funds and $13.1 billion into ETFs. Taxable fixed income did slightly better, had positive net flows of $47.9 billion. Mutual funds took in $31 billion of that, while ETFs $16.9. Muni debt had net inflows of $9.3 billion for the quarter. Mutual funds $8.1 billion and ETFs $1.2 billion. In our last group, money market funds, large net outflows for the quarter, $84.5 billion overall. Big change from Q4, where we saw $104.7 billion in net inflows for the quarter for the group. Overall, mutual funds had $22.2 billion in net outflows. This is, again, another change from Q4, where we saw $97.4 billion in net inflows for mutual funds. The activity in both quarters is largely influenced by the money markets results that we saw. ETFs for Q1, $31.1 billion in net inflows, while in Q4 they also had net inflows of $109.2 billion. The decrease there is attributable to a reduced amount of inflows into equity ETFs. In Q4 we saw they had $88.6 billion in net inflows, while in this quarter just $13.1 billion. Moving on, next slide we take a look at our fund flow information by equity macro groups. First group, U.S. diversified equity funds, had net outflows of $4.8 billion for the quarter. In contrast, during Q4, they also had net outflows of $14.1 billion. So they had a slight bump there, slight change there of about $9 billion. Sector equity funds took in $12.7 billion for the quarter. Again, a slight bump from Q4. They saw where they took in $6 billion, so $6.7 billion increase for that group. And lastly, world equity funds had the biggest net inflows for the quarter at 17.7, and also experienced the largest period-to-period change with 10.8 billion increase from Q4. Our next slide takes a look at the net flows for a selected group of ETFs. The first ETF on the list, SPY, the Spider S&P 500, as you can see, experienced the largest changes for the quarter. Q1 saw net outflows of $31 billion for the ETF, while in Q4 they had taken in $27.7 billion. So quite a swing there, approximately $58 billion swing there for the ETF. The other ETFs on our list, it's the inflows and outflows all relatively small, nothing greater than +5 or -5, and as well as comparing period to period with Q4, the results for the remainder of the group are relatively static as compared to the previous quarter. Our next slide takes a look at equity fund flows, broken out by the macro groups, and the largest inflows and outflows by classification category. Starting with U.S. diversified equity, we see multi-cap core funds had net inflows of $10.4 billion, and S&P 500 index funds had net inflows of $8.3 billion. Compared to last quarter, each classification experienced positive net inflows last quarter as well. Multi-cap core had an increase of $6.1 billion from their $4.3 billion in inflows last quarter, while we saw the S&P 500 index funds had a slight bump of $3.3 billion from $5 billion in positive flows. Moving on to our world equity funds macro group, international multi-cap core led the way with net inflows of $9.2 billion, followed by emerging market funds that had net inflows of $4.7 billion. Again, International Multi-Cap Core had a strong fourth quarter as well with net inflows of 10.3 billion, while emerging market funds bounced a little bit in Q1 after having net outflows of 1.4 billion in Q4. In our sector equity macro group, healthcare biotech funds took in about 3.2 billion, while global healthcare biotech had net inflows of 1.4 billion. Again, this builds upon the positive net flows we saw in Q4 for each group, as healthcare took in 2.5 and global healthcare had net inflows of approximately $1 billion. Moving on to the largest outflows, large cap core, large cap growth had approximately the same, around 7.5 billion in outflows for each of those groups in Q1, and large cap core had outflows in Q4 as well, approximately 5 billion, while on the flip side, large cap growth took in approximately 4 billion in Q4. In world equity, we saw the largest outflows from international large cap growth and global small mid cap with 3.5 and 1.1 respectively. And this is a continuation of the flow trend from Q4, where international large cap growth had about 5 billion leave and global SMID had about 1 billion leave. And finally, we get to the largest outflows in our sector equity macro group, utility funds, approximately 700 million in outflows, while financial services approximately 100 million in outflows. Slight change from Q4, where each experienced a small inflows, approximately 100 million for each. Our next slide, we're going to take a look at the largest net inflows and net outflows per classification group. Starting with the net inflows, core bond funds, net inflows of 19 billion in Q1. A solid performance here, but slightly down from Q4's performance, where the net inflows were over $30 billion. Moving on, multi-cap core took in 10.4 billion, as we spoke on the previous slide, an increase of about 6 billion from the previous quarter. International multi-cap core, same information from the previous slide, about 9.2 billion in inflows, slightly down from the previous quarter's performance. S&P 500, 8.3, a slight bump from Q4 at 3.3 billion, while high yield funds had net inflows of 6.5 billion for the quarter. A major change, a significant change from Q4, where they had approximately the same in net outflows. So we saw, a change for inflows of about $12 billion there. Moving on to the largest net outflows. If we think back to the first slide, we spoke about money markets having the largest net outflows overall as a group, and this is illustrated here as the top four categories or classifications we're going to speak to are all money markets. Institutional, down about 23.6. Institutional U.S. government, approximately 22.3. Institutional U.S. Treasury, 14.1. And then finally money markets at 10.9 billion in net outflows. These four overall accounted for about 71 billion in net outflows. So they accounted for the lion's share of the net outflows for money markets as a whole, which was roughly 84.5 billion. Last category on the list to speak of is large cap core. Net outflows of 7.6 billion for the quarter, which is continuing the trend from the previous quarter of net outflows. In our last slide, we take a closer look at the fund flows for our taxable bond group. At the top of the chart, we see core bond funds, which we spoke about previously, at roughly 19 billion in net inflows for the quarter, followed up by high yield, which we also touched on briefly before. If we swing down to the bottom of the list, we've seen loan par funds leading the way there with the largest net outflow. Net outflows of 5.3 billion for the quarter. This comes on the heels of Q4, where they had about 13 billion in net outflows, and that was the second largest net outflows for the taxable bond group. Of note, about midway through the list, we see the Core Plus category had slight net inflows of approximately 700 million. This is in contrast to Q4, where they had net outflows of roughly $19 billion. Well, that wraps up my portion of the presentation. I'll hand the floor back over to Tom.
Thanks,